All right, let's dive right in. Today, we are going to dismantle the single biggest optical illusion in finance. Seriously, this is a mistake that costs new investors an absolute fortune, and we're going to fix it. Welcome back to the Neuro Finance Masterclass. I want to start with a question for you. You see two companies, right? One has a stock price of $5. The other is trading at $500. Which one is cheaper? Now, just listen to your gut instinct for a second, because it's almost certainly wrong. That feeling, that little voice in your head screaming that $5 is a bargain, well, that's what we call the cheap stock trap. It is, without a doubt, the most common error new investors make, and in the next few minutes, we're going to make sure you never, ever fall for it again. Here's exactly how the trap gets sprung. You see that $5 stock, and your brain just lights up. You think, wow, that's cheap. It could easily double or triple. Then you see the $500 stock, and you immediately recoil. Whoa, no way, that's way too expensive. But the truth is, you're making a huge decision with practically zero real information. So let me be as clear as I possibly can be on this. A single stock price, all by itself, is one of the most useless, misleading numbers in all of finance. Relying on it isn't just a bad strategy, it's mathematically wrong. So how do we find the real value? Well, to do that, let's break it down with a simple analogy. Okay, so to really get this, let's just forget about stocks for a second. Seriously, we're going to talk about pizza. And I promise you, this simple analogy is going to make everything crystal clear. So imagine this. I walk up to you, I've got a slice of pizza on a plate, and I say, hey, $5 for this slice. Is that a good deal? Just think about it for a moment. You can't answer, can you? It's impossible. You're missing the most critical piece of information. How many slices are in the entire pizza? See, if that pizza was cut into just 4 massive, giant slices, well then $5 is an absolute steal. But what if the pizza was cut into 100 tiny little slivers? Well, now you're getting completely ripped off. The price of the slice is totally meaningless without knowing the size of the whole pizza. And that is the perfect analogy for the stock market. The slices of the pizza are the shares of a company. A company can decide to cut itself into 1 million shares or 1 billion shares. The price per share simply depends on how many slices they decided to create. This brings us right to the solution. The one number, the only number that professionals use to see the true price tag of the entire company. It's called market capitalization, or market cap for short. So what is market cap? It's simple. It's the total value of all of a company's shares combined. Think of it this way. If you had enough money and you wanted to buy every single piece of that company, the market cap is the price you'd have to pay. It's the real price tag for the whole pizza. And the best part? The formula is, well, it's ruthlessly simple. You just take the stock price, that's the price of one slice, and you multiply it by the total number of shares, which is the total number of slices. That's it. That is the entire secret. And here is where it all clicks into place. You might see a stock that's only $10 a share, and you think, that's cheap. But what if that company has issued 1 billion shares? Well, you do the math, and its true value, its market cap, is a staggering $10 billion. That is the number you need to be looking at. All right, I'm back. And understanding this one simple calculation, well, that's the dividing line. It is literally what separates the amateur investor from the professional. It's a completely different way of seeing the entire market. This slide lays it all out, doesn't it? The amateur lens focuses on the price of a single share, just one slice of pizza. The professional lens completely ignores that. It focuses only on the market cap, the value of the entire pizza. And I want to be really clear about this. For a pro, this isn't just a guideline or a helpful tip. It's a hardwired reflex. When a professional investor looks up a stock, their eyes literally skip right over the stock price and go straight to the market cap. It is the first and most important number they look at. You know, this protects you from that dangerous, wishful thinking. The next time you hear someone say, oh, I hope this $1 stock goes to $100, you'll be able to do the math in your head. You'll quickly see that for that to happen, its market cap would have to become bigger than the entire global economy. Why? Because math does not care about hope. It only cares about the numbers. Okay, we've covered the why. Now let's talk about the what. It's time for your action plan. We've given you the theory. Now it's time to actually train your brain to see the market like a pro. So here's your task for today.
It's a simple cognitive exercise. I want you to open whatever financial app you use and look up 3 companies you know. Could be anything, a car company, a coffee shop, a software giant. But here's the key. I want you to consciously and deliberately ignore the stock price. Find the metric that says MKT cap and just compare their true sizes. I think you're going to be really surprised by what you find.
So there you have it. You can now see past the most common illusion in the financial world. You've been given the professional's lens. The only question left is, what are you going to discover with it?